we can go as low as 551 on the credit score. 500,000 for one legal entity and up to 750,000 if they have two legal entities.
What's up, YouTube? Welcome to the Credit Plug channel. So for today's video, we have a very special guest. We have Karen Coleman from ARF Financial. As a lot of you are aware, we did a review on ARF about 6 months ago. ARF is a direct lender that offers a variety of business financing solutions to small and medium-sized businesses. So it's a pleasure to have you on, Karen. Welcome to the channel.
Thank you so much. It's an honor to be on your station or your YouTube channel. You do a terrific job for all of your subscribers, and I really appreciate the opportunity to be on. Thank you.
I know you've probably been in contact with some of the people who've already applied, and definitely appreciate all the hard work you've been doing. So let's jump right into it. So I know ARF isn't like, one of the big banks, right? But how does ARF kind of fit into the overall business lending landscape in terms of your business model? What types of borrowers kind of fit the ARF profile?
Absolutely. Thank you so much. So we actually partner with banks. We have a number of assorted bank partners that we work with. We're in essence credit enhancing the loans. So in essence, the merchants do not have to put up collateral. So these are unsecured bank loans and offering lines of credit as well. The types of borrowers that we're looking for are people that are at least, we actually have two types of platforms technically. We have our preferred industry types, like for example, restaurants, somewhere where they can come in physically, either provide a service, maybe like a doctor's office or a medical practice, or maybe a liquor store, salon, something like that. And then we also have our expanded portfolio, which we started last year, where we can do wholesale, or we could do manufacturing, maybe a food processor, something like that. But it's important that it's not a home-based business. We do not do any kind of home-based businesses. We need to have a brick and mortar type location where maybe they have a website as well. We look at that too. And for our preferred industries, we need at least 1 month in business. So we look at 1 full month and we'll take that times 12. And depending on how long they've been in business, so at least 1 month. Or we also look at, for our expanded portfolio, they need at least 2 years in business. And our average tends to be about maybe 200,000 a year. It has to be at least 200,000 a year. But I'll have to say a lot of our businesses that we work with are larger. However, we can go 500,000 for one legal entity and up to 750,000 if they have two legal entities. So it just depends on time in business, how much sales volume they bring in, what their credit score is. And we also look at home ownership. What we've discovered over time is if someone has a home in their name, they've just been a better borrower for us because we've been in business now over 20 years. And we've noticed that they've just been better borrowers for us. We have all different types of lending. The one thing though that I would mention is we do get a lot of requests for trucking and for construction. And unfortunately, we don't do those businesses. But there are certainly many others that we can help.
Can you dive into like all of the different data points that are used to assess a borrower in terms of, and you already stated, the income, the monthly and annual income. What about credit scores? What type of credit scores, would be the minimum threshold? And is there a particular credit bureau or credit model that's being used to kind of create that baseline?
Yes. So I'd say our average tends to be 650 to 700 or even above 700. However, we can go as low as 551 on the credit score. And we do look at all the credit bureaus, but we use Equifax. So that we have discovered is a good bureau for us, and that's who we use. So we have a number of different terms. We have fixed terms that can go out either for a year, year and a half. Now we've actually, as of last week, are offering 2.5, even 3-year terms. We're going back to our roots. During the pandemic, we had to scale back, but now we are back to offering longer terms, larger loans. We can, in essence, go up to 500,000, as I mentioned before, on one entity, but they would need to be open for a longer period of time and certainly have that volume. So it does depend on their time in business. Little as 1 month, but the longer you're in business, 3 years, 4 years, 5 years, you're going to be able to qualify for more. And the opportunity for them to extend out longer, if they have a larger loan, will make their weekly payments less because it is a weekly withdrawal from their checking account. As I mentioned before, we look at the time in business. We look at their credit score, whether or not they have a have a home ownership, and they don't have to, but they'll just qualify for more if they do, and the sales volume. So those are the criteria that we look at. We have fixed terms. Again, we have something called flex pay, amortized out over 2 years, but to pay off in 1 year. That will make your weekly payments much lower because what we'll do is we could take either 25%, 33%, or 50% of the principal and push it to the end like a balloon, but we call it a deferred payment. And the merchant at that time has the ability to decide, what would we like to do? Do we want to wire the funds and be all finished? They may have had a project. Maybe they opened up a new location, for example, and the new place is doing great, and they have that opportunity to wire the funds and they're all finished. Or they may decide, okay, now I'd like to roll it out into the extended term. And so they are welcome to do that. Or maybe it worked out great for them and they'd say, now we have another project. We're going to open up another new location. We'd like to be able to extend out and refinance and get a new loan and another line of credit. And with any of our products, for example, let's say a merchant qualifies for 200,000 and they only need 100 right now. They can take 100,000 and have the rest of their approval go as a line of credit, and that availability for that line of credit is for up to 6 months, and they can take up to 5 drafts during that 6-month time frame. So it's a nice opportunity for them to get the money now, get it working for them. And a number of our merchants many times are bankable and are waiting for that SBA loan, for example. They have that opportunity to take the funds now, get it working for them. And then when that bank loan comes through, we can either subordinate to the bank or they can pay us off. So it gives them that opportunity to get the money now, get it working for them. But we do really like to just tailor all our loans to the merchant's needs. And then what are the funds being used for? It's important that it's being used for something that can help them grow. Are they expanding into a new product or product line, or are they looking for a new location or renovations? Or I just talked to a restaurant yesterday who's expanding his patio, and it's getting cold, but now they're doing all this outside and they need heaters, so it just depends on what the use of funds are. But we do like to have that discovery call with each merchant and really understand what's best for them.
So I wanted to also just ask a quick question about the overall life cycle of the loan application process. So when someone submits an application, what are all the different steps in terms of the application, and how long does the underwriting process take from initial application all the way through funding?
So the process usually takes 3 to 5 days. If the merchant has applied and uploaded their bank statements, we use something called Plaid. So if their bank participates in that, it's actually a bit quicker because that makes it much faster. If the bank does not participate, we look at the last 3 months of bank statements. Usually it'll take about 3 to 5 days, but we do also have a landlord phone call. So sometimes that can delay the process. So then I'll say a week, but it's pretty quick.
One thing we talk about a lot on our channel are data points, just so that, prospective borrowers are aware of any type of roadblocks that might prevent them from being able to get a loan. Is there anything else that a borrower should be aware of during the application process?
There are a number of things that the underwriters are able to obtain from the credit. Where do they live? We do need to know their home. Because it is a bank loan, we do have to abide by Bank Secrecy Act rules. And so it's important that we have all that information. What are the funds being used for? We do need to have their driver's license and secondary ID. So we also look at whether or not there are any tax liens. We can actually pay off a tax lien, for example, but it's important. It's like, how much is it? And is there a payment plan in place? Have they paid the last 3 months, or have there been any bankruptcies? We can, if it's been charged off over 3 to 5 years, it depends on what type of bankruptcy, but we can make that work as well. And then also, do they have any other cash advances? We don't layer with any other cash advances. We do have the ability to pay off up to 2. And we can do that. Like, for example, if a merchant qualifies for 100,000 and they have 50,000 worth of cash advances, we can pay those off because usually then our weekly payments can be less and it helps their cash flow. So that's an opportunity for them as well. But if they've been layering a lot, or they are overextended, that can dampen the approval, unfortunately.
A lot of our audience, they may already have some type of financing, whether that's business credit card, a line of credit, or maybe even a loan. Now, what technically qualifies as, I guess, layering, right? Is it just cash advances? Is it business loans? If someone has a revolving line of credit at their bank, does that count? And how does the different positions work? If you could kind of explain that, like first position, second position.
Yes, absolutely. So if a bank is already there, that's fine, as long as it's a traditional bank loan. If they have borrowed from another company that has a cash advance of some sort, they may be pulling from their credit cards daily or from their bank account daily. That's something that we would have to pay off if the balance makes sense, and if that can get approved. It's worth a discovery call just to see whether or not that can make sense, but it would be important to know what's their balance now. How soon did they just take those funds? It's important that merchants don't take too much money and overextend themselves. It's almost like buying a home. Sometimes I want to go into my house and say, I want to renovate this whole house, but I've got to do this in tranches. So I always say that even to business owners, it's important to do things as you can afford them. And sometimes you have to do it over a longer period of time. And when you borrow from all these different companies, that's not healthy for your business. It's important to look at that and really understand, why do they continue to take money? Because sometimes if you've overextended yourself, you're wanting to borrow again just to keep up with that cash flow of having to make those payments. Ours is not a cash advance. It's actually a loan. Interest is all tax deductible. And it's important that merchants don't overextend themselves, because that can really hurt their business. That's why we're always having that conversation with the merchant to understand the full picture of not only what the funds are for, but what do they currently have, and when did they take those funds, and when are they needing it again? And do they need this every year around the same time, like for a seasonal type purpose? Are they in growth mode? It's important to look at all those different factors.
So if anyone is interested in exploring financial options with ARF, we've dropped a link in the description of the video. Again, Karen, it's a pleasure. I definitely appreciate all the great work you guys are doing over there.
Thank you so much. Love helping your merchants. They're terrific.
Absolutely. Well, thank you very much. And hopefully, we'll have you back on someday. Definitely appreciate you coming on to share some wisdom with our subscribers. We greatly appreciate it. So thank you very much.
Absolutely. Let's make 2022 a great year. Thank you.